Assalamu alaikum. Hello and welcome to our second Fatra podcast. In today's podcast, we're going to discuss the relationship between institutional banks and fintechs. And we're super lucky here today to have our very own strategic advisor, Mr. Ali Jawad. Welcome, Mr. Ali.
You're most welcome.
Alongside myself, co-hosting this episode, I have my co-founder, also Mshari Al-Mnayir. Welcome, Mshari.
Thank you so much.
So without further ado, I'll let Mr. Ali Jawad do an introduction about his vast experience in the banking sector. So, Mr. Ali.
Thank you. I have started my career all in banking, and luckily I have spent more than 25 years into the banking, which is mainly to do with the payment industry, looking into the acquiring, issuing, digital transformations when things have moved out from the traditional business of payment to digital to e-commerce. And I have spent that time learning and coordinating with all the schemes and banks. And thanks God, we have built the biggest e-com to Bahrain as for the government. I'm also on the advisory board for a university in Bahrain called Ahliya University. And on an NGO, I'm extremely active on NGOs. So I'm a vice chair of Bahrain Internet Society, as well as an international organization called ICANN that support internet. So I'm there for Asia Pacific and Middle East.
That's great. I mean, it's a pleasure to have you on our advisory board, Mr. Ali. I believe that since the first days, me and my co-founders believe that you have a lot to put on the table. But before delving into the questions, I'd really like to give a very short story on how we met you, Mr. Ali Jawad, at the very beginning. So our relationship with Mr. Ali is not a traditional relationship, meaning at our very early days at Fetra, when we were trying to approach banks in the GCC in order to build those partnerships, Mr. Ali Jawad was on the other side representing one of the banks in one of the countries in the GCC. And we found him to be very cooperative and very interested in the idea. So that's where the relationship started. With days, we found out that Mr. Ali Jawad is not only a person who is tied to legacy banking, but also is a player who can add a lot to a very early stage fintech like ours. So it's a pleasure to have you, Mr. Ali Jawad, again as advisory board at Fetra. So in our first stage of this podcast, we would really like to discuss the relationship between fintechs and banks, legacy banks, and would really like to understand from your point of view, from the experience that you have, how banks view fintechs like ours. And we're going to delve into the nitty-gritty details. So regarding the first part, why can't banks solve all of the tasks on their own, Mr. Ali Jawad? Meaning, anyone watching this podcast would assume that banks have all of the resources, they have all of the tools in order to approach and tackle all of the obstacles that are in the market. So where do fintechs come in, and why are they necessary?
Thank you for the questions, Victor. Maybe this is something not new. We know that the banks have built up themselves as a rigid banks, and the way that they have started into the industry, because they are controlling the financial ecosystems, and they have the biggest market share when it comes to the financials. So when they have built that ecosystem, and now fintechs are trying to disrupt this, it was extremely challenging for them at the beginning, but later on we'll come to how things have been moved out. But first of all, there was lots of, I would say, fear from the fintechs. They might take some market share from the regular commercial banks, but things have moved totally different. But today, still the banks have these challenges that they are looking after, which is how they move fast, how they can serve this agile movement to the businesses, and the changes, the dynamic change that is happening within the financial industry.
exactly?
Yes. From what I see regarding banks and SME, we found out that the financing gap regarding the SMEs is more than 250 billion. Yeah. Mostly banks look at financial statement and past performance, but they really don't see, that what happening, day to day. Late payments, supplier bills, sudden drops in sales, spikes in sales. So from your side, Mr. Ali, what part of the SME reality do you think banks are really not seeing?
Well, again, I would say this is when the fintechs terminology started. This was a challenge, to be honest. When the banks are not seeing that fintechs are adding any value to them, they looked into the fintechs are a threat in a way or a waste of time. Because what I have realized, and I will speak practically, uh, when the fintechs approach banks, banks thought about them as just a waste of time. That is at the beginning, I would say, because all the banks have their own priorities, projects, and initiatives. So when fintech, somebody starting a company with 2 or 3 people coming with the new technologies, with the new idea initiatives, that was not looked into seriously. And that what happened to most of those who started the early stage, they found lots of resistance from the banks or from the financial industry to accept them, or even try to uh, arrange for a meetings. I mean, everybody was just busy with their day-to-day businesses, so they were not encouraged, I would say, to sit with somebody just coming with an idea, even bank looking to money. So myself and yourself coming to the bank, I said, I have an idea, I have a platform, I have an app. Say, this is just a waste of time. We need to look into how we can move with something totally different that generate revenue to the banks. And that was the major things for the banks is revenue and a profit where they can make that money. But by the times, I'm sure everybody have realized the shift from this challenge to an opportunities that is happening.
Yes, exactly. I think what you said is absolutely right. In the early stage, they looked at it as a waste of time, or it's a new thing, and everyone is afraid of trying new things or collaborating, given that the banks have their own legacy thinking, and they're used to a specific pathway regarding how they collaborate with these kind of financial beings. I think, and with time, it have shifted from neglect to having some sort of competitors' point of view. Uh, some of the banks see that the fintechs are some sort of, competitors to their financial system. Uh, where can you see that the collaboration? How can we exchange knowledge or exchange? How can we merge these two entities? Do you think that, Mr. Ali?
Great question and a great point for discussion, to be honest. Because if we looked into what happens today, the financial institution, the legacy financial institutions, when they have seen the movement either within the region or even outside the region, they realize that no, there is an opportunity. There is something that we need to tap in, otherwise we will be out. And this is where, if you notice that most of the banks, especially the commercial banks, have started even creating their own entities as a fintechs, because they start, and I witnessed that myself, and I've seen it in several organizations that I was sort of in a way involved in, or from an outsiders. First of all, they start to look into those fintechs or startup. They said, okay, let's just buy a share on it. So to avoid any competition or competitive happening later on. But then they realized, no, why we just invest in this? Let's create our own. So digital banks started. Banks are creating a separate entity. They call it a digital bank, fintech arms, fintech hub. So for them to serve different type of segments in a different ways, instead of continuing doing the legacy without having, or trying to align with the market, how the market is moving. We noticed in the Gulf region, tens of digital banks have been created. And the surprise is it's not only from financial institutions that digital banks have been created. Telecoms have created digital banks. Companies that start with issuing or using one app to issue a card, it converted to a bank because it's proven its successfulness, and the demand for that type of service, I would say, the digital platform and integrations and the change in the community have moved to that direction.
Perfect. Honestly, Mr. Ali, I would really like to narrow the discussion because the spectrum of where fintechs and banks can collaborate is very wide, as you definitely know. Therefore, we'd really like to focus today on the aspect of SME lending to just narrow down the discussion, and that's what we are doing at Fetra here today. So, what do you think banks misunderstand about SMEs specifically? Because banks, they do have the resources, yet SMEs are still underserved and still underfinanced. So if we take the fintech aspect out of it, all traditional SME and bank relationship, what do you think the issue is at this moment?
As we know, like banks, to give you a credit or a finance, normally take them like 8 weeks, 4 weeks, 5 weeks, whatever the process and the procedure of that banks. While fintechs can deliver this in much lesser and even that impact the cost as well. So SMEs need that agility. SMEs need that finance, and we know that the market and the demand is there. But the banks look into that SMEs that how would I lend an X amount of dollar or dinar to an entity that they just started. They don't have even an audited statement. Yes. So they think, the banks always think of risk. So this is a core for the financial institution. It's a high risk. So when they looked into it, and they have to go through regulations and compliance, and who own it? What type of entity this SMEs? Are we guaranteeing that we'll get our funding later on? What is the risk that we are would accept in a time based on the amount that we are lending to these organizations? While fintechs can easily do it, because banks, going back to your questions, Dr. Khalid, banks looked into, as we said, the financial statement. To me, as an SME, I've just started. I don't have a financial statement. I have just a business that I have started it with. So there was so many other factors that the bank neglected or not looked into it. And I would say, to be transparent, this was sort of, I would not say a past, but this is not as of today, because things start to change, and financial institutions realize this again, that why I don't lend this SMEs. But the gap is still there.
Yes, I mean, you bet me to that point, Mr. Ali, because what I was going to say, that due to the risk tolerance that banks have, this created a very huge gap in the credit market. And this is honestly one of the reasons that we started this company. I mean, we at Fetra, we really don't believe that there is only 1, 2, or 3 fintechs that can really fill in the credit gap in the GCC. Let's say specifically, the credit gap is very huge. But luckily for us, with a very good business model, with very good, operation standards, this gap can be provided, and we believe that the general economy will benefit from it. I mean, it's not a type of business that creates value for the business and doesn't have any true reflection on the general economy. I mean, from where you stand, definitely you understand how the financing of SMEs can help the general economy, and definitely the viewers would like to understand how do you see it as a banker.
Yes. I would say when the SMEs came to the markets, lots of, let's say, financial institutions again looked into it that they are a high risk. And even if they will lend them even a small amount, the requirement will go extremely high, which is not encouraging even to the SMEs to start a business. Somebody will start with a track, food track or some others. But to encourage him, you need to be a little bit flexible. And again, the agility for dispersing the loan and the credit to those organizations or those SMEs is a crucial for them. And again, the repayment and the rates that it's being charged as interest or commissions or whatsoever, again, it's a challenge for those SMEs. There is a study done on in UAE, I would say, a survey, if I would say. The survey says that 75% of SMEs felt financially constrained, but only 17% sought bank financing and just were approved. So the gap is from 75 to 17, and half of them just being approved. So, and as we said in the starting, the gap is around $250 billion is in the market.
It's huge.
It's huge. And the opportunity is there for whom, like Fetra and others, they can tap into this with different innovative idea and different approaches. And especially when it comes to the supply chain.
Yes, as we see now in the current market, I think we can all see that progression in the banking sector is very slow. We're talking about legacy banking. It's a gigantic institutions. I think the small SMEs that they are untapped are very, let me rephrase it in a better way. I think fintechs are very crucial with collaborating with banks to better underserve these SMEs, because in the end, they are the crucial market that we try to tap into. Do you think in the near future regulation can be better aligned with these fintechs so the partnership can be superb between those two?
Absolutely. And if you look into the market, especially speaking about the GCC, all GCCs now in their long-term strategy visions, which is starting from 2030 to 2040, some of them 2035 and others. SMEs now are core of that strategies. And it's not just something on paper. That's why I said absolutely things are moving. And thanks God, and that's helped that gap into the market. In different countries, there are hundreds of millions being allocated to those SMEs. If I may just give an example, because I came from Bahrain and I know Bahrain. Just recently, if I'm not mistaken, around 70 million plus or minus BD have been allocated to support SMEs. And that was in collaboration with different banks, that is with the governments and with semi-government entities to support SMEs. And it's not only supporting SMEs and funding them for loans or others, supporting them a long way with their progress and development on so many other things. And I know in whole GCC now, the focus are on SMEs. And even in the tendering businesses, I know that multiple countries now have allocated a special percentage that if there is any tender for the government, like that percentage goes to the SMEs to get into that ecosystem of the tendering business. So allocating this and not just having it on paper and having this part of the core vision of the countries will definitely change the whole formula that was in the past, and looking into how SMEs now can evolve. And supporting SMEs, the banks trying to get the fund in, but the bank again goes back to the technology.
Yes.
So that's why those fintechs that comes in and have that agility in the technologies, like enabling the digital platform instead of just financing, because the bank would love to continue doing the whole process as going through KYC documentations and so on and so forth. While if they partner and cooperate with the fintechs, they can just finish it in hours through an app. And we have,
Agility is key.
by all means, and we have noticed this now, all those buy now, pay later BNPLs are taking big market from the whole GCC and others as well.
Yes. I want to ask you a simple question, but it has a complicated answer, I'm sure. So the question goes as, what makes a bank trust a fintech? As simple as that. I mean, the question is very simple, but I know the answer is not that simple, Mr. Ali Jawad, as a bank.
To be honest, they don't trust them. If they would trust, they would easily go. But we see the results as an end user or outsiders, we see a collaboration happening. But before that, the process goes in a very complicated journey. Again, due to number of things, the regulators, the banks are extremely regulated, so they have to go through different due diligence to make sure that when they partner with any fintechs, they are safe, they are compliant, they are regulated, instead of having the banks or the financial institutions in a high risk. So the result is clear, but they have gone through a very complex due diligence and a process to get that fintech A or fintech B part of that organization, because that fintech will have the name of the bank. So, and that have a huge impact on it.
So I think there's a difference between emerging fintechs and already established fintechs. So this is the way banks look at it. If it has a track record of distributing loans and have history and that ecosystem, you have a much different look than an emerging fintech with great ideas, with great platform. I think the vision of those fintechs are differentiated in the eyes of the banks, yes?
Definitely. That's why starting fintechs they find some complex and challenge to get the trust from the banks, to get the trust from investors, because as you correctly mentioned, the track record is not there. So once you have that track record, that is a proving stamp that give you the opportunity to get in a bit quicker or much, I would say, easier and linear with the investor or with the banks, because the banks at the end will invest in you, and they need to have that trust. They need to know who is Ali, who is Khalid, who is Mshari, and then what is their record, what is their history, and the idea itself behind that, and the technology. When you do the due diligence and the testing of the technology, that is it proven, is it up and running, is it secure, because that is extremely important for the
And the default rate.
default rate when you go to the SMEs again. Yeah. And even the default rate on the owners, to be honest, like if the owners have some I would say not a clean track record financially, that is again a question mark.
Personal track record.
Yes, yeah, as an owner,
Yes.
because that will impact the business.
So you look at both the owners and the fintech itself.
Absolutely.
Yes, okay.
True. I'd really like to take advantage of you being with us today. So your experience is not only within the borders of the Kingdom of Bahrain, but also the general GCC when it comes to regulators and central banks. So I'm sure a lot of the viewers maybe don't understand what the central banks are doing. So from where we stand at Fetra, we really believe that central banks are moving very rapidly in aiding fintechs and achieving what they want to do. I mean, regulation in the GCC, we said it in the last episode. I'm going to say it again and maybe again in the future. It's one of the leading globally, one of the leading, not the leading. We're very proud to establish our entity in a GCC jurisdiction. So I'd really like to have your view of what is the future of regulation generally about GCC, and if you want to define some countries and what they're doing, we'll be happy to hear from you, Mr. Ali Jawad.
I can see that most of GCC, not all of them, most of GCC is leading the fintech businesses within that region, because either they already establish regulations for them, or they are in the process of establishing that regulations. And I was so happy to hear about, I cannot name now countries or others, but some countries, when you go to them with an idea that is not part of any of the regulator that is there, they don't stop you as long as you don't have that much a huge risk or something that will harm the financial ecosystem. They allow you to start. And there are different regulations. Until they develop that regulations, that with all boundaries, with all procedures, with the requirements, and then they would ask you to come and register under that. Some other countries, they take little bit, let's say, caution in doing that. Say, you are not yet, or we don't have that regulations yet. We might keep you under different regulations, which is a little bit complicated because you are not a financial institutions. And then if you will be mandated with the mandates of the compliance of the financial institutions, then, I mean, it is a bit of useless to say I am a fintech. Fintechs require agility. And if you goes under that, then that's a bit of difficult to move fast. But again, GCC are leading that, as you mentioned, Dr. Khalid, correctly, leading the fintech business within our region here. And there are some countries that regulators are moving fast, others are building, but all of them are accepting this. And all of them seeing that the opportunities and to be transparent and proud of now, within GCC now, lots of ideas have been moved out as well.
Yes.
Reached out globally because of how big and how successful those ideas.
Yes, I mean, again, without mentioning any names, maybe Mshari remembers we had a very fruitful discussion of one of the central banks in the GCC, Mr. Ali, and we had a very unique business model, and we were surprised that the response from the central bank was, or the representatives of the central bank was, guys, we don't have this within our rule book, but if we give us time to study it well and you can update it, we don't mind changing our rule book just for you. So you can see how
Here you go. Yeah.
how progressive is that? I mean, for a new idea like us, exactly. So Shari, if you'd like to.
If I can build on what you guys said, regulation is key. Regulation is critical. Regulation is everything. It's the things that bind, or it can elasticize enough to give room for innovation. Fintechs are an innovative platform. They want room for innovation, and the regulatory rule books or from the central banks in the GCC. Do you think in the coming times there can be more room for innovation, so it can be more lucrative for banks to collaborate with those?
I can see this positively happening, and most of these regulators now, whenever there is something new, they share what they call it a consultations paper with the financial institutions to understand their views of something new coming or the new regulations they are coming. As we said at the beginning of this, like, At the beginning, they were always, most of them, they say no, clearly, you cannot move. They say because they build all of those regulations and the ecosystem on different views that have been there for years. Now, suddenly, when it comes fintechs and it's just disrupting all of that, it was sort of a shock. But now, uh, all regulators and even the I would say the team that within the regulator entities have been changed, and now we have more youth people coming there, and the mindset is being changed as well. And thanks God to the higher authorities that is being pushed on all of those to say we need this. And that's why I said in my previous point, uh, countries are allocating millions and millions now the way they need to support SMEs. When they said they want to support SMEs, then fintechs have to support those SMEs, the other ecosystem. So it is a chain that need to be supported. So level of countries, then goes on the level of regulators, then goes on the level of the financial institutions. So the collaborative is coming, and it is happening, and it's being developed.
That's great to hear. So you kindly explained to us why banks might be worried from fintechs, which I think was very clearly answered. Can we discuss the concerns of the regulator now, Mr. Ali, when a new fintech comes? I mean, how do regulators think from your point of view?
Risk. It's all about risk and compliance, because they are the one who is regulating the whole financial institutions within a country. So if things are being missed, there are within the fintechs there are crazy ideas.
Yes.
Yeah. So when you go and implement an ideas without being it regulated in a way that to protect all stakeholders, from consumers to the lenders to the owners, then there will be a mess, to be honest. And when I was on a different side of the businesses, personally, I was pushing for fintechs and very hard. I was pushing for that and trying to implement most of the ideas. And I was against that rigid regulations when it comes from central banks or any other regulators, or even within the internal control within the financial institution itself. But then when we start seeing what's happening into the market, because I spoke from a business side. So as a business, you want things just to move. And our enemy in the business is the regulators and compliance and others, as from a business perspective.
And from a fintech perspective.
So, but then we have witnesses, to be honest, let's be very much transparent. We have witnesses that there was a misuse, or there was real unplanned or incorrect planning for some other businesses, which caused lots of, losses again. Those losses goes and impacted the country itself, impacted banks. So when the regulator says, no, I need to make sure that I'm putting the right regulating, but now they are trying to align and adjust as they move. Like if you go today and they ask you for 10 things, tomorrow they will ask for 8, but they will, because they know how it will work. They know how you are controlling it.
Adapting to it.
Exactly. So, but at the end, I believe that now what the regulators are doing, they are trying to protect the country. They are trying to protect the ecosystems at the end. And we have seen this. There are a number of crowdfundings that collapsed. There are fintechs that collapsed. There are so many ideas that didn't work and caused lots of other issues within the country.
And it's the responsibility of the regulator at the end of the day. And from where we stand, I mean, yes, we are too excited, but we understand why might regulators give us some hard time. I mean, they have to be responsible, not only towards us, but towards the whole financial system. And as you kindly mentioned, to the regular guy in the street, this is responsibility of central banks. Now, one of the reasons that we have Mr. Ali Jawad as our strategic advisor is to have some sanity, because we are a group of very enthusiastic members. So, Mr. Ali Jawad, I think we said this before, but I'm going to say it today in front of the viewers. So, at Fetra, we view our business model in a way that we want to manage the lending part to the SMEs using our technology and utilizing our resources. At the end of the day, we want to get to a point where the banks sit and relax, provide the funding, get some interesting and nice returns at the end of the year, where Fetra manages all of the operations. So we view ourselves as a layer 2 to a layer 1 of existing financial institutions, which has been there for decades now. Since you're a strategic advisor, I mean, please, the floor is yours.
The idea of Fetra is something that I really like, and it is workable, and it will fly, inshallah. All what you need is the time. As we mentioned, is once the trust is there, once you start, once you have your first and second clients, and things are moving smoothly, definitely investors or banks will be backing this. And I have seen this happening in different, especially in the buy now, pay later, even in Bahrain. And I've seen number of companies that they started themselves, they funded themselves up to a certain limit to prove to the investors, being at a banks or separate investors, that we are solid, we trust what we have, and we can deliver. And after that, investors start approaching them to get in, because especially into the buy now, pay later or lending. If we go again to the first point, that the market gap is huge. So whoever will try to cover this with a solid idea, with a solid founders, which we have.
Thank you.
Thank you.
And
solid advisors too.
Thank you so much. So definitely, this is what the investor is looking for. This is what they are looking for.
Thank you, Mr. Ali. I mean, it has been a pleasure to have you here in Kuwait. Hopefully, we'll see you a lot more in the future. You want to finalize this podcast with a note or with a comment, with an advice to us, an open advice where all our viewers could see?
We will see Fetra very soon everywhere, and I'm sure that the successful will happen with the support of all of you and with the regulators changes that is happening as we move, and wish you all the best.
Thank you, Mr. Ali Jawad. Thank you. So thank you for being with us today, guys. Hopefully in our next episodes, we will discuss further regarding other aspects of our ecosystem, whether it be regulatory, technology, or finance. Hope to see you soon. Thank you.